This is Craig Thomas, and let's jump right into it. Now, I've been looking at NASDAQ and thinking a lot about the 50-day SMA, which means simple moving average, and the 200-day SMA. Now, what is the simple moving average? It's very simple. It's just the average price of the stock or the ETF over the past 50 days or 200 days, whatever time period you want. Now, why 50 and 200? That seems to be conventionally what people look at. And since a lot of people look at it, it has become psychologically important. Now, when I look at this chart, it looks to me like the 50-day SMA is headed towards crossing below the 200-day SMA. The 50-day is this purple line. The 200-day is this blue one. Now, if the 50-day crosses below the 200, that's called a death cross. And it's an important psychological indicator that many believe predicts a bear market or further stock declines. Now, while it looks like it's going to fall below, I don't know for sure if it will, and I don't know when, okay? But I want to know. And I feel like it should be possible to look at scenarios to figure this out. Now, I couldn't find a place online that allows me to easily model indicators like simple moving average just by letting me play with future stock prices. So I decided to open up Excel. I downloaded some data from Yahoo Finance, and I decided to see for myself under what conditions will QQQ have a death cross and what could happen to avoid a death cross. And what I found was very interesting. So let's jump right into the Excel. So here's my very simple Excel spreadsheet, and I'll post a link to this spreadsheet below, so feel free to take a look. I got the data from Yahoo Finance. I downloaded price data going back to 1999 for QQQ, which is the NASDAQ 100 ETF. Now, I'm focused on the closing price. So I got rid of the open and the high and the low for the day. I just kept the close. Okay, now I added the return, the daily return. I also added the 50-day simple moving average and the 200-day simple moving average and the difference between the two. And that's the important thing that we're going to look at. Now, if this is positive, then the 50-day is above the 200-day, which is generally indicative of a bullish environment. And if this is negative, then the 50-day is below the 200-day, which means that more recent prices are lower than less recent prices on average. And this, to some, indicates a bearish environment. Now, I also added the all-time high up to that point because I find that interesting. Now, if you see, and this is the percent off of the all-time high. So if you see a green 0 here, this is an all-time high, a new all-time high up to that point. Okay, and then anything less than that means it's come off the all-time high by some amount. You know, here, January 6, 2000, they were down 15% from the all-time high. That wasn't the daily drop, but that's how far they had come down. Now, I'm going to spare you the history lesson and skip straight to the bottom. Again, feel free to look at this data. I find this more interesting to look at than a chart. I feel like I can see more by looking at the raw numbers. Like, I can see the chart in my head when I look at the numbers, but that's just me. All right, so let's go to today. We're going to scroll all the way down here. You can see there's periods where that difference is negative. That means it's below. Some of those periods are short. Some of those periods are long. We have a very long period of no new all-time highs from like 2008 through like 2016. Finally, we get some new all-time highs. Then it drops below again. And that brings us to where we are today. Let's go to today, February 14th, 2022. QQQ closed up 0.12%. It was a very whipsaw today. We were up as high as almost 1%, almost down 1%, but closed, I mean this is basically flat, 0.12%. Now, I have future dates here and potential future prices. Let me be very clear. I have no idea how NASDAQ is going to move going forward. I really just want to see which moves will result in a death cross and which moves will prevent it. So let's play around with this, okay? If we assume that we stay flat on average going forward, then we will get a death cross on March 2nd, okay? Now, it's unlikely that we're going to stay flat, right? Let's say we go down more from here. Let's be very modest. We're going to go down average negative 0.25%. Okay, that gets us to our recent lows of 340 by February 25th. It only moves up the day of the death cross by one day. Okay. Now, what if instead, you know what, this is actually the bottom. We're not even going to retest our 340 low. We're just going to go up from here. Let's say we go up 0.5%, which is pretty aggressive. If we go up 0.5% on average, then we don't have the death cross until March 7th. Okay? So it's delayed, but it still happens. So what amount will prevent the death cross? Let's try 0.9%. Let's put that in there. Now with 0.9% average daily returns going forward, we avoid the death cross. We get closest March 16th. Okay? But that's where the difference between the 50 and the 200 is the closest. But then it kind of bounces off from there. We also get new all-time highs by March 10th. Okay? Now, do we think we're going to get to all-time highs by then? I don't know. Now, let's say we get to this March 10th date and we decide, you know what? We're going to stay flat from there. We're not going to have any more all-time highs. We still get the death cross. If we get back to all-time highs by March 10th, we still get the death cross. Now, it's a very short period of time where the 50-day is underneath the 200, which would be great, but it still happens. So what does all this mean? First, it means that I find it highly unlikely that the NASDAQ index avoids the death cross unless we see some miraculous short-term gains. Second, it means that the news is going to spend a lot of time talking about the death cross and what it could mean. They're going to bring on all their experts talking about, here's the death cross, here's what it is, here's when it's happened in the past, here's what happened in the past. Okay? Now, the third thing is I have no idea if this will be short-lived or not. I don't know if we're going to bounce back quickly, like from the COVID 2020 crash, or if it will take longer, like 2018 or 2000, which took a really long time. Now, I think the death cross will happen in the first week of March. And I think a lot of people are going to freak out. But if you're a long-term investor, like me, then there's no reason to freak out because the American stock market always makes it back from these downturns. Sometimes it takes a long time, but it always happens. So don't freak out and stay focused on your long-term investing goals. That's all you got to do. Now, thanks for watching, and I will catch you next time.